Welcome to Talk Tickers. Today we're diving into the latest from Charles Schwab. They just dropped their fourth quarter 2025 results, and we're going to break it all down for you.
All right, so let's get right into it. There's a real puzzle at the heart of this report. On one hand, Schwab posted some record numbers, fantastic client metrics and really strong growth. But on the other hand, the stock barely budged. So, what gives? That's exactly what we're going to figure out.
Okay, first things first. Let's take a look at those headline numbers. How did Schwab actually do compared to what Wall Street was expecting? So if you look at the numbers, you'll see a tiny miss. We're talking just 1 penny on earnings per share and a bit light on revenue. But honestly, that's not the real story here. Look over to the right. The year-over-year growth is absolutely massive. Revenue is up 19%, and earnings? A huge 38% jump. That's some serious momentum.
So where did all that growth come from? It's really interesting when you dig into what was actually driving that performance. Let's pop the hood and look at the engines, shall we?
Well, it really came down to two key things this quarter. First, net interest revenue. That shot up 25% year over year to almost $3.2 billion. Wow. Then you've got trading revenue, which also jumped 22%. You put those together and it paints a really clear picture. Clients are super engaged and the rate environment is definitely working in their favor.
And it wasn't just about growth. Management made it crystal clear they're focused on shareholder returns. Get this, they sent a massive $11.8 billion back to shareholders in 2025 through buybacks and dividends. Just this quarter alone, they bought back $2.7 billion in stock. That right there is a huge vote of confidence from the company in itself.
During the earnings call, management spent a lot of time looking forward, not just back. They kept hammering home these 3 strategic pillars for growth, really digging in with their wealthy clients, expanding into new areas like crypto and alternatives, and using AI to get more efficient. The whole idea here is to build a business that's not just about traditional brokerage.
All right, now for what's next. Let's talk about their outlook for 2026, because this is where the investment case really starts to get interesting.
And this slide just lays it out perfectly. This is the core of their entire strategy. They're telling us they expect revenues to grow a whole lot faster than their expenses. And what does that mean? Well, it's the classic recipe for what's called operating leverage. Basically, more of every new dollar of revenue drops straight to the bottom line as profit. That's how you expand your margins in a big way.
Okay, so let's recap. We've got strong performance, a ton of cash going back to shareholders, and a really positive outlook for expanding profits. Which brings us right back to that first question we asked. Why on earth didn't the market get more excited about this?
Look at this. The stock closed the day up less than 1%, barely a blip. For a report with these kinds of record numbers, it's pretty quiet. It makes you think the market either just shrugged it off or maybe the bar was set incredibly high to begin with. But you have to put this in context, and this part is really key. In the month leading up to this report, Schwab was actually in the green, while the rest of the financial sector was down more than 3%. So what that tells you is that Schwab was already showing some serious relative strength. It seems like a lot of that good news and high expectation was already baked into the stock price.
So with all that in mind, let's pull everything together. We're going to lay out our thesis for the stock going forward and give it our official rating. Now, before I give you the rating, let's just be clear on what we mean when we say outperform. Simply put, it means we expect the stock to do better than the overall market or its specific sector over the next 12 months. Simple as that.
Okay, here it is. We are initiating coverage on Charles Schwab with a rating of outperform. And our thesis is pretty straightforward. We think the market is way too focused on that tiny little miss on the headline numbers. What they're missing, in our view, is the much bigger, much more powerful story about operating leverage that management is laying out for 2026.
So how do you think about this as a trade? Well, the play here is to build a position because you believe management can deliver on that margin expansion plan. The big checkpoints or catalysts are going to be the next couple of earnings reports. That's where we'll see if the story's playing out like they said it would. Now, what's the risk? It's the big picture stuff, the macro environment. If interest rates suddenly fall off a cliff or trading just dries up, that could definitely throw a wrench in the works.
This has been Talk Tickers. This is not financial advice.